Okay, that's the time that I have to talk. The Today, we had a client. They own this company. They have a food truck business. It's a partnership actually. It's the him and his wife. They uh they made somewhere close to $200,000, but the problem is there's so many things that were not done right in terms of their books and taxes. Number one problem that we saw, uh, they use the personal account. So they use the personal account to buy a truck. So what the question is, how he's going to report it, or how he's going to declare it. Although we do not recommend to use your personal account to for any purchases on your business, but it happens especially when you are a startup. The first thing you need to do on your QuickBooks, if this happen, is what you call the reimbursement of this. Number one, the first thing you're gonna do, you have to go to your QuickBooks online, then create a new, go to new, and then journal entry. Then put the amount of money. So, for example, this company, he paid $35,000 to report to purchase a food truck. Then the column should be debits. And then on the second line, you have to click partners equity or owner's equity. If you are a sole member, it's an owner's equity. But if you have a partner, then it's partner's equity. Then enter the same amount of purchase on the credits column. Then save and close. That is the step one. Then step two, you have to decide how to do the reimbursement. So I'm only showing you the reimbursement method. Select new and then select check. And then after that, select a bank account that you want to use to reimburse the personal funds. And then select the category, because we put a while ago, it's an equity, whether it's a sole owner's equity or partner's equity, you have to choose that category, then enter the amount to reimburse, right? Now, the second method that you can do if you don't want the reimbursement is you can select new, the option two, then select expense. Bank account, the same process, category, partner's equity. Owner's equity, you have to save and close. So that's how you do if ever that you're using your personal expense as a business for business transactions. As much as possible, stay away from doing this. This is not a good habit. It's going to create more problems for both you, to the IRS, and also to your accountants or bookkeepers. All right, now, so on top of that, this is it's just like we're opening the can of worms. The client has been submitting a Schedule C return way back 2019, and that's the problem. A business partnership return, you need to have a 1065, the form partnership return or 1065, because if it's a 50-50, we have to use that return, which is the deadline on March 15. And then if you have a partner that's 50-50, we have to report that will generate a sub form called K1. Those K1s will be reported on the personal return. Since it's a husband and wife, we have to report them on a 1040. We're going to attach the K1 form, and therefore he doesn't need to use a Schedule C. That's why there's so many tweaking that need to be done. That's why I said he asked us which one that we have to do first. I said it's like a house. All right. So just think of a house that the foundation is your first year in the business and the roof is the current year. If, let's say he started 2019 on the business, that is the foundation of the bookkeeping. We have to fix this first and correct. Otherwise, if this is not correct, and then there's no solid financial foundation on on the flooring, then the 2022 will fall down. So which means to say, if the tax bookkeeping are done wrong for 2019, then your 2022 is also wrong. That's the reason why we have to reconcile 2019, 2021, and then 2022. Then also the next is to file an amendment for the 2019 or 2019, oh no, 2020, 21, 22. No, 2020, 21, I'm sorry. Because 2020, 21, since they did not report that on their business return, the 1065 was not reported, we have to report that back. And then also the same thing with 2021. But remember, guys, even with do your tax return, do not, you have to expect that there's a corresponding penalty of not filing on time. And if you ended up paying taxes to the Internal Revenue Service, then you also have a penalty of not paying on time. Then on the lighter note, the client can also qualify with the depreciation expenses because they did not report their assets. They did not fix their balance sheet, so there might be a wear and tear depreciation expenses that they can benefit from to minimize their taxes. Okay, so that's what we have. September 15. Again, the deadline of taxes for the partnership return and the S-Corp would be September 15. But the deadline for the personal return and the C-Corp return will be October 15. But because it falls on the weekend, you have until Monday, October 17 to file your return. Okay. The networking event was a success. Last Tuesday, the business mixers, the soft launching of my company here in Dallas, Texas. What are my takeaways? I've learned to really the power of network. Like you need to really be involved with the community, the business community, and exchange ideas, share, and then maybe you can build up a complementary partnership or strategic venture that complements your services. All right, so it's really exhausting the whole day. That's why. Anyways, what are your takeaways? If you want to know more, learn more. If you want to know more, comment below. Then click and share to my content today. Again, I'm Chris, WYCOTAX Business Person of the Year here in Texas for 2022, founder of the virtual tax and bookkeeping company here in Texas or in the US in general. See you soon. Stay safe.